Welcome to the Real Estate Stat Show. So, here I'm going to kind of go over some real estate statistics that we're seeing in the Minnesota and more specifically the Twin Cities area. I really, really love real estate and I love statistics and numbers and all of that. So, I figured I'd kind of do a little show here where I dive into it and kind of go through this and hopefully bring some kind of be able to help read through the insights and kind of make sense of everything. So, I just kind of want to break down kind of weekly market activity and a few other things I'm seeing in the reports here. So when I look at the weekly market report from the Minneapolis area realtors for the week ending September 21st, national inventory was up 35.8% year over year in August, which I think is crazy. But that does kind of show that there is a little bit more of a slowdown in the national market. However, that doesn't necessarily affect the Minnesota market. So overall, I think that's interesting. But the biggest thing here is I want to kind of unpack what's going on specifically in Minnesota, because if prices are up 30% in overall in the country, or maybe I should say if inventory is down 30% in the country, that doesn't mean that inventory is down 30% in Minnesota. Every state's going to be a little bit independent and every area is going to be independent as well. When I look at the Twin Cities region for that week, new listings increased 11.9%, pending sales decreased 1.5%, and inventory increased 11.4%. So there, that's kind of showing the same thing where we're increasing inventory by 11.4% over that 35.8%. So we're having a little bit less of like that national slowdown, but still a little bit of a slowdown in numbers, it looks like here, because we're not having as many sales come through. So it looks like there's maybe a few less buyers in the market right now. So it'll be interesting to see kind of how things play out now that interest rates have dropped a little bit. And now as we kind of enter in towards the end of the year here, there's a lot of speculation that interest rates will continue to drop. So I'm very curious to kind of see what pending sales does and kind of, I guess, all of these numbers too. So for the month of August, the median sales price increased 2.1% to 388,000. Days on market increased 21.2% to 40 days. Percent of original list price received decreased 1.3% to 98.7, and months of supply increased 17.4% to 2.7%. So median sales price went up 2% in 1 month. That's kind of a decent jump. So it'll be interesting to see when the stats come out for September to kind of see what happened there and kind of where it fell, because generally prices go up through July, August, and then they kind of come down for the rest of the year. So we're probably seeing the peak there at that median price of 388, and I'll be very curious to see what it does at the end of the year here, just as I talked about earlier with interest rates potentially coming down even more from where they've already come down. I think that could bring more buyers into the market, and potentially we maybe see an increase above that 388 level. However, that wouldn't always go with historical timelines. Days on market increasing to 40. That is definitely interesting, but that makes sense, right? We have more listings on the market, so stuff's going to sit a little bit longer and longer and longer, which is not ideal for sellers, but that's just kind of the market we're in now. The benefit to sellers is that as we have this market where there's more homes on the market, so you're maybe not getting the highest list price that you could have gotten in spring, summer, you're able to buy a house a little bit cheaper now because of the discounts and all the homes that are stacking up on the market. And so in real estate, they always say the money you make is on the buy, not the sell. So the biggest thing here is we know homes are going to appreciate. They're going to go up in price. And a lot of times you're transitioning from a house and going up in purchase price. So like you'll buy a house for 200, sit on it for 5 years, sell it for 300, go buy something for 500. And so when we break down the numbers there, if you lose 2% on selling your house at 300,000, you've lost $6,000. But if you're able to get that $500,000 house at a 2% discount, you've made $10,000. So now those kind of cancel out and you made $4,000. So I think that's kind of why right now seems like a relatively decent time to buy. I've been telling my clients who are actively buying that I think this is a great time for them, because we do see this really good pocket of opportunity where interest rates are down almost 0.5%. I mean, from the peak this year, I want to say interest rates are down 1.5%, which is massive. I mean, that's massive savings for a lot of buyers, and it looks like interest rates could continue to come down through the end of the year. However, as we're seeing here, days on market is increasing, and then the supply of homes is increasing. So for buyers, there's more to look at, and stuff's sitting for a little bit longer, and you can get a discount. So most people in real estate are buyers. Not everyone is just kind of selling a property and not going to buy another one. So I think this is good news for a lot of people. Obviously not great if you're just selling a property, and it's not the best on the sell side, but I think for buy side, these are pretty good numbers, and I think this is exciting stuff to see. And then here, scroll down to the new listings. So you can't see this, but I can. Haha. So when I'm looking at the last 3 months here, they kind of have this graph showing where listings are. And so, what is that? June 29th coming in there, we had about 150 more new listings this year than we did last year. And we've been seeing new listings increase, increase, increase. The only times that new listings were higher last year than they are this year was a week of, let's see, August 31st, and then the week of July 6th, which July 6th took a big dip both years because 4th of July, a lot of people kind of take off. And then when I look at the 3-month total here, week by week, the first week ending in June 29th, the current activity was 1413. So for new listings, which is up 12.6%. But then the following week, ending in July 6th, so 4th of July, current activity was 924 new listings, so down 20%. But that makes sense for 4th of July. And I'll kind of skip through all this, but I just want to say that following week went up to 1677, so the week ending July 13th. And then it kind of gradually came down, not steady, but gradually came down to now 1435, the week ending September 21st. Numbers got down to 1123 at that August 31st. So I think what we're seeing here is, the seasonality of the market where there's less people out there buying houses, less people selling, just because a lot of people try to squeeze it in and like before school's out or as school's out in summer. And so once that happens, kind of people are targeting to make their move earlier. And kind of once you hit September, late August, that's generally when there's less people in the market. However, we see that as an inflection point, and numbers got up to 1435. They were 1450 for 2 weeks straight, and then 1435 the following week, which are numbers that we kind of saw more so in summer. So I think that also is indicative and kind of shows the showing activity from those interest rates dropping. I find the real estate market's very reactive to interest rates. So interest rates are kind of proactive towards the Fed rate, and then the actual real estate market and buyers are reactive, which I think is kind of interesting, but makes perfect sense. And then I'm going to scroll down to pending sales here. So for our pending sales, the week ending June 29th, we had 1,061 pending sales. This number decreased the following week to 839, and then stayed about 950 for 3 weeks before jumping to 1066 the following week, which would be the week ending August 3rd, which is kind of an interesting jump there. Really interesting, because I can't necessarily think of anything specifically in that time period that would have caused for that difference, but it's interesting. I love stats. That's, kind of love digging through these things, and it's always interesting to find something like that. But then as we look here, so every week after that, they continually dropped, and now our pending sales are 879 for the week ending September 21st. So that number is going down and down and down, but it's only 1.5% lower than it was last year. So not crazy low, but there's other points in the year where it was a lot lower. For the week ending July 13th, it was down 15%. For the week ending July 27th, it was down 11% from last year. So, and the average for the last 3 months is 6.4%, but in the last 3 weeks, it was up 11.9%, then down 4.5%, then up 1.5%. So it looks like we're maybe seeing a few more pending sales, which again goes in line with lower interest rates. Inventory. So when we look at inventory of homes, we're looking at the total amount of homes on the market. I will go through this one quickly because I generally like to look at months of inventory and just kind of use that number more so than looking at the overall amount of homes, because that doesn't always tell me as much. Months of inventory, for those of you who don't know, is calculated in generally like 1 through 9 is kind of what we see for months of inventory. And I guess the easiest way I can explain it is if you have 10 homes and 20 buyers, that you have half a month of inventory because you have double the amount of buyers from homes. So in theory, over the first month, like those 20 buyers would buy all the houses. Now, if you had 30 houses and 10 buyers, you'd have 3 months of inventory. And if you had 60 buyers, 60 houses and 10 buyers, you would have 6 months of inventory. So a balanced market is about 6 months of inventory. Buyer's market is 9 months of inventory. Seller's market is 3 months of inventory or less. We right now are at 2.7 months of inventory, I believe, from what I read earlier. So that means we're not in the crazy, crazy, crazy seller's market that we had before, but we're still in a seller's market. It may not seem like it, but, still in a seller's market according to numbers there. An interesting thing, though, that almost counteracts what I said is the days on market stat, because it's still a seller's market, but days on market is going up. Um, so August 2022, days on market was 27, which August 2022 was a little bit of an interesting time. So interest rates were about 6%, but that was a weird 6% because we came from 3% early in the year up to 6%, scared off a lot of people. And so that was like a pretty rapid slowdown. Um, but it is interesting to see that it's at 27, because then the following August we were at 33. So August 2023, which is a 22% increase. And then now days on market is at 40, which is a 21.2% increase. So days on market's definitely going up and up, which kind of goes in line with everything here that we've been talking about. So days on market, it's taking a little bit longer to sell houses. And as we looked earlier, the average percentage of list price, or the ratio there, is 98.7%. So if you list your house for, call it easy math, 100,000, you're going to get $98,700. So days on market goes up. So if you list your house, on average, it's going to be 40 days, and you're going to be discounted 1.3% off the list price. So again, not always the best thing when you think about selling your house, but when you think about going to go buy something else, I think this is a really big advantage. And just kind of overall talking about the numbers of all this, I wish I had a whiteboard to run through these numbers, but I guess food for thought: if you're going to buy a $300,000 house, if you could buy it now with, call it a 2% discount, then you're saving $6,000 there. And so you buy the house, interest rate is whatever you have, 6%, 6.5%, and you get that locked in. We, now without a shadow of a doubt, but we very, 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 very much expect interest rates to drop into like the 5.5% range at some point over the next 2 years. And when this happens, this is going to bring a ton of buyers into the market. On average, when interest rates drop 1%, that brings 5 million buyers into the overall US market, which is absolutely crazy. And so we know when rates drop, and we know rates are going to drop. So when they drop, we know it's going to bring a lot of people into the market. More people in the market causes prices to rise, as we saw in 2020 and 2021. So we can kind of conclude that if you buy a house now, you'll get a little bit of a discount on the price. At some point, your interest rate could go down, and then at some point, the prices will go up. So you can buy at 300,000. Maybe after 2 years, it's worth 330,000, and your interest rate dropped 1%. So you could save $200 a month. So in that situation, you made the $6,000 upfront with a 2% discount. You made 30 grand of appreciation over 2 years, which that's 5% appreciation for 2 years back to back. I think if interest rates drop 1%, we could see that because of all the pent up demand that we have. And then you would also be saving $100 to $200 a month on your mortgage because your interest rate dropped. So that's huge. That's $36,000 and $200 a month, which $200 a month, if you annualize that, is $2,400. So I mean, that's real savings. Those are big numbers there, and that's on a $300,000 house. Imagine if you buy 400,000, 500,000. Imagine if you find something that is a little ugly and needs work, and you get a 5% discount on that. You make even more money. I think in this market we're seeing opportunities, and I think it gets overlooked at times. And I don't mean this just to be, realtor try to sell people houses, but I think, generally what we've seen is that prices go up year over year over year over year. And so a lot of what I say and a lot of what realtors say is now is a good time to buy, because for the general public, it is a good time to buy. Like whenever you need a house, like that's kind of the time to buy. Now you could try to time the market, because we know generally prices are the highest in July and August. So if you can maybe try to buy a house in November, December, but you have no idea what's going to happen. So that uncertainty can kind of make things difficult. I had a client who one day was looking at this property and he wasn't fully decided of if he wanted to move forward with it or not. And this was a time when interest rates were really rising. So we kind of waited on it for 2 weeks. And in that time period, interest rates rose, I want to say 0.75%. So his payment went up $200 a month, which was not great because he could have got that and locked in the lower rate. And so that's on a much smaller scale. But to me, that is an example of kind of waiting doesn't always help. But yeah, weird segue, but I'm going to go into the median sales price because I feel like this kind of segues into what I was talking about earlier. So when we look at August 2022, median sales price is 370,000. August 2023, median sales price is 380,000 for a 2.7% increase. August 2024, it is 388,000 for a 2.1% increase. So we're seeing prices continually go up 2-ish%, which is about average, despite the bad real estate market or the tougher real estate market where we're seeing more homes sit on the market and less homes sell. Prices are still going up. They're still appreciating at a relatively fair amount. And so that's why I think that we could appreciate at 5% a year for 2 years if interest rates drop 1%. That's not, I'm not a mortgage guru or anything like that. But I just, if we're going up 2% now, I could definitely see it going up another few percentage points as time goes on. And then looking over the week over the last 3 months, it's been pretty consistent of increases between 2.2% and like 3.2%, with a few outliers up to 4%, a few outliers up to like 1.5%, but generally all about in the same range there. This is an interesting one. So percent of original list price received. So in August 2022, it was 99%. So list your house for $500,000, get an offer for $495. August 2023, it went up 0.1% to 100%. Or sorry, August 2022, 99.9%. So you put up your home for, call it 100,000, you get 999.99 on that. August 2023, it's 100%. So put up your home for 100,000, get an offer for 100,000. And then this August, we're at 98.7%. So put up your home for 100,000, get an offer for $98,700. And so that's dropped, which I think is in line with the amount of homes that we've had on the market. More homes generally leads to more options for buyers, leads to a few less offers for sellers. When you have less offers, you generally don't sell for as high of a price. But that's not to say that multiple offers don't occur. I've encountered multiple offers a good handful of times over the last few years here. Especially in the last year, despite the fact that it's dropped, we still see multiple offers and good activity. So a lot of it's based on the price you price a home. The biggest things for homes is price, product, and promotion. So if you have a great price for your great product and you have great promotion, it's going to sell at the price it should sell for. So biggest thing is take care of the property, have it be in the best condition it can, because that's the product. You want to sell a good product. If you're selling a bad product, you could be a great salesman, but you're going to struggle with a bad product. Now, the next thing is price. So you have your product, you have it as good as it can be, right? You've painted, maybe new carpet, touched up a few things, but now you have to price it right. So you don't want to overprice it. You can underprice it and get away with that, but overpricing it is terrible. That's like a sin of real estate. Because if you price your home at $500,000 when it's worth $400,000, it's going to take forever to sell because you have to keep dropping the price to try to bring in a buyer that sees the value, and that's going to take a hot minute. And so if you price at $375,000, you're probably going to bring in multiple buyers, and they're probably going to drive that price up to that $400,000 mark, and you're going to sell much quicker. So you can get away with underpricing, but overpricing, not so much. So back into those, you have product. So again, take care of your product. Pricing, you want to price it right. Get it right on the nose of what the price should be. Don't overprice it. And again, you can get away with a little bit of underpricing. Then the next thing is promotion. So that is open houses, door knocking, mailers, social media, and kind of just having a website and kind of contacting everyone that comes in through there, and then having a personal sphere and off-market network. So these are all things that I provide to all my sellers and all my clients, and these are all things that help get houses sold. So you bring those three things together, and you're going to sell a house for as much money as possible. So not everyone does that. A lot of times you see like the 3 point plan, which is kind of I'll take iPhone pictures, put a sign in the yard, and put it on the MLS and wait for it to sell. That's not great promotion. So you can have a great product and a great price, but without that great promotion, it might not sell as well. So that is an amount that explains an amount of that 98.7% because there are realtors that are still selling houses above the asking price. Next year is a housing affordability index. So this is something kind of like a newer stat that I've been reading through. I find it interesting. It's something I need to break down a little bit more, but I find it very interesting just to kind of see how affordability is marked and kind of what we see in the market here because, wages will go up over time continually, not as much as housing prices. So it is interesting to see those ratios change over time. And so when we look at August 2022, the housing, actually, let me go back and read this. So it says this index measures housing affordability for the region. For example, an index of 120 means the median household income is 120% of what is necessary to qualify for the median price home under prevailing interest rates. A higher number means greater affordability. So in August 2022, we were at 138%, so pretty decent affordability there, I think. August 2023 dropped 18.1% to 113. So that's a mix of interest rates going up and prices kind of staying where they were at, and then just kind of the market trying to adjust and stabilize. And then this year, August 2024, we're at 119 for an increase of 5.3%. So with interest rates being slightly lower, that helps with that. And then I think prices only going up 2% between 2023 and 2024 helps. When you look at, it'd be interesting to see 2021 because when prices jump so much, I'd be curious to see how the affordability index changed there. If that was a bigger or smaller change or decrease than it was in 2022 to 2023. And actually, an interesting thing I'll look into here is kind of the index over the last 12 months. So the average is 119. And if we look at the highest months, so that is December 2023, January 2024, and February 2023. So that is 128, 127, and 123 for the affordability. Those are the highest. Other ends of there, March 2024 is 121, and November 2023 is 118. Every other month after that is below 115. So those was at November through March. Looks like those are the months where you have the most affordability. Every other month after that is below the actual average affordability. So that's also why I kind of was saying like right now is a decent pocket because we're in October. So November is entering into that phase. And so if you're kind of starting to look for a house now, you're going to enter that phase. You're going to get into that part of the market where you see the most affordability. And just because it happened in November last year doesn't mean it won't happen in October this year. So I think I really do think we're seeing a good bubble, but that, doesn't always mean it's the right time for people to buy. I know earlier I said when it's the right time in your life to buy, that's when you should buy. And I stand by that, but it's not always the right time in people's lives. Sometimes you have big changes. Sometimes, sometimes someone gets sick and it doesn't make sense to move. Or sometimes someone has a baby and they don't have room and it does make sense to move. Sometimes you've been living with parents for a while, you want to move out and that makes sense to move. There's a variety of different reasons, and I don't think everyone should move at this given point in time. But I think if it fits your situation, that moving now could be a decent decision. But, that's kind of all up to the individual. Last stat I have here in the Minnesota area realtors stats is months of supply. So kind of touched on that earlier, but now I can actually see the numbers. So go through this quickly. August 2022, we're at 1.9. August 2023, we went up 21.1% to 2.3. August 2024, we went up 17.4% to 2.7. So months of inventory has been rising for 0.8 between the last 2 years here. So nothing, I wouldn't say that's anything major, but people could disagree with that potentially. But I feel like, the market's relatively fine. We always say the market's crazy because it moves a lot and it's very dynamic and robust, but I feel like inventory being at 3 months isn't crazy. I think that's manageable for a lot of people, and I think a lot of people can handle that. The next thing, I wanted to go into, I guess the last thing here is the weekly pulse. So this is for the week ending September 30th. And so it's just a little weekly report kind of going into stats here. So they say with mortgage rates at the lowest level since May 2023, showing activity was up for another week. Last week showings were up 4.2% overall compared to this time last year. So when we look at this, I mean, showing numbers were dropping from July through September pretty consistently. And then now in the last 2-3 weeks here, showings are up again. So like they're saying here, you see that with a drop of mortgage rates. So like I was saying, the market can be very reactive. So we see rates drop, showings go up. So that's just kind of what we're seeing there. And then their second point is the largest year-over-year gain in showing activity took place in the luxury segment, so 1 million plus. Luxury home showings rose 52.8%, and the largest gain was in the $400,000 to $500,000 range, where showings were up 25%. Or sorry, the second largest gain. So that luxury market has seen a real big boom. And the luxury market, like, they're affected by interest rates a little bit more. I mean, when your loan is 600,000 versus 200,000, like your interest rate is going to affect you a lot more. It coming down 1% doesn't go down $200, it goes down $600 a month, and those are big savings. And so that's why I believe we're seeing, over a 50% increase in the luxury home showing area. But I also think it's interesting that in the $400,000 to $500,000 range, we see showings up 25%. Because there's more homes on the market and less sales, but showings are up. So I think if I were to guess that we're maybe seeing a decrease in the lower price ranges, because that's also a price range that gets affected a little bit more. That's a first-time home buyer in there. So if all of your money goes into affording a home and then interest rates go up 0.5%, it's harder to afford that home. And so not saying that interest rates went up 0.5%, I just feel like those kind of lower price points, people are getting pushed out a little bit. And I think it is a little bit more competitive. But I will want to pull more data and kind of look into that. So that could be the second show that I look into there. And then the last point that they have here is that the dominant range is the $300,000 to $400,000 price range, makes up the largest share of showings at 28.2%, and listings over $1 million representing 3.2% of all showings. So that range has gone up a lot in the luxury price range, but it's still a relatively small percentage of the market. But I think if you're thinking about $1 million homes, I feel like you don't think that's 3% of all the homes out there. At least I personally don't. So I think that is interesting just to kind of see that market almost double over the last year here. But that's kind of all I have for statistics right now. So just kind of want to go through two different parts right here and not talk for an hour. How long did I go? 28 minutes. So I feel like that's hopefully a little bit digestible and kind of makes sense here. I really enjoyed doing this, kind of going through numbers. I'm a big real estate nerd, so hopefully you get some value out of this and find it interesting. Let me know if you have any questions. I'd love to just do other formats like this where I just kind of sit and talk through things, whether that's questions, statistics, or anything else like that. I like to help people learn kind of a little bit more about real estate, and I do enjoy kind of getting behind the camera from time to time, even though I don't do it a whole lot. So with that, hope you got some value from it. Reach out and let me know if I can help with anything else.